Just want to start off with you know what we're doing here next month. We're having a boot camp up here, and would love to see some of you guys come along, if possible. Knowledge to Action have knocked a discount off, saying it's the Christmas price. Um, I think another $500 off the price. So yeah, come along and trade with us or trade with me from here. And if you're interested, send Sire an email or myself. Um, Apparently, a lot of people are saying that it's the wrong time of the year. Um, I don't know if that's the real answer, but it's before school holidays, so I would have thought that it'd be a good time. Anyway, um, be a lot of fun involved trading from here, and it's a great time zone in terms of the European starters in the middle of the afternoon for us up here. So, with that sort of out of the way, we've got a few emails to go through. So, first one is there's no chart involved. It's just looking at the Euro Aussie. And the question was, should I move my stop loss? Well, it doesn't say where your stop was, but you got in on the 13th of October. 13th of October, which, this day here. So I presume your stop is underneath that. Look, I got in for different reasons on the break of this, and I got moved my stop after this reversal bar, and obviously got taken out yesterday. If you're happy to move your stop, but you need a reason to move your stop. Okay, and I'd say this bar is a fair reason to do that. Being that it's you could look at this as a phase two or certainly a pullback. We've got these little cycles coming along here. Let me just blow this up to a bigger screen. And if your stop's under here, it's up to you, really. It's part of the trade plan that you should have. And you might say that you'll only move your stop until you can get it at break even, but you're prepared to wear what you've risked at the start. So you'd leave your stop there and saying, well, I risked $100 on it, and I'm prepared to risk that $100 come what may. But as soon as I can get my stop to break even, I'll move it then. That might be a part of your trade plan. If you had moved your stop to here, obviously it would have been a minor loss. If you move your stop to here, it looks like about a third of what your original target or original risk was, $100. So you might walk away with a $70 loss if you move it under here. That's really up to you. It's there's no right or wrong in doing that, but you do have a reason to move this. You could say there's trend line resistance here. You could also say there's horizontal resistance if you want to make that argument too, and the price is not going to manage to get through that area. And therefore, save yourself $30 by moving your stop. But this is, it's a little hard to judge. I don't know where your account is, whether it's positive or negative, and that would have obviously also have an influencing factor on your trade decision. But if you mentioned that you don't want to move your stop, I'm totally okay with that. If you're prepared to wear the loss that you originally set out to do, that's fine. Okay. All right. We'll come to the first of the charts, which is looking at China. Certainly broke out of this this triple bottom here, and it looks to be sort of now heading, well, getting stronger for the Chinese. They had some good data come out yesterday, and that was which forced this through the support level. Short trend continuation. I'm not sure where you're getting in. Right up. Like this is there's several different ways you could look at making an argument for this trade, and it was yeah, you trade the breakout of that support at 613 across here. Um, and if that's the case, then would you really have your stop above this high here? You could look at this being a cycle underneath it and say, well, yeah, I'm going to trade the new phase one going down. So trading the breakout or the phase one would be getting you in at a similar price underneath the low of this bar here. There's a couple of ways to look at that. Getting short the US dollar against China, I think is not a bad trade. It's just finding the right setup for it, and you could look at it as a phase one, and this is not too late to trade the phase one yesterday as the breakout, or sorry, as a breakout, or a phase one yesterday was the day for the trade. I think you'd probably pushing the friendship by trading today underneath yesterday's low. I think that's probably a bit too far out. If you're not in this, you could potentially look at it in the shorter time frames, although the spread might get you a little sort of difficult. What is it? Oh, it's only a 10 pip spread. You might look at the hourly coming back to retest this and trade it short off that if you're not in this. But trading it on the daily like that is the trade was yesterday. And this you sent me this morning, so I don't know if you're in. Fib extensions gives you a risk reward of less than 1. RSI is under 40, so no trade. Yeah, well, RSI is under 40, that's true. Well, certainly under 40 now. Was it under 40 yesterday? Yeah, certainly not around here, which is where you'd prefer to be getting short from. So in that, to me, there is potential more downside because you're not oversold yet. So I would be looking at it, having a see what today eventuates over the next couple of hours and potentially trade that on the shorter time frame. So you're still participating in the trend. And you'll be out by the time the daily does get oversold, and obviously your risk reward would therefore increase to something that's more comfortable than, as you suggest, of 1-to-1. Is a question of the US dollar is getting stronger, and why is this falling? Well, it's obviously the matter that China is performing better than America in terms of growth and strength. So I'm not adverse to sort of shorting the US against the China. I am adverse to shorting the US against a lot of other things, but certainly wouldn't be too worried about it against it here. So, Swiss Sing, both short signals on the Euro Sing and the Swiss Sing. Very similar to the Euro Dollar and Dollar Swiss. Gap lower, did it? Yesterday. Short trend, yes. Lower highs, horizontal trend line resistance. Fib to 1.272 gives you 1.5. Okay. Let's come up and sort of tested the 50. You got a horizontal there. That all looks good. Swiss Sing. Again, the trade. This is an inside bear bar, which you probably would not have necessarily looked at. It's really only 1 day of selling. You then get this bar, the gap open, lower high, lower low. It's a buyer bar, so I would not have gone in with the full 1% on that. There seems to be a bit of a support level across here. So yeah, I would have gone in there thinking, well, if it gets underneath that, well, that's a good sign. But I wouldn't have gone for the full 1% on that button. There's still a trade there. The other thing I was just wanting to look at was the trend line. Come on, mouse, wake up. So you could say that yes, you've got one cycle underneath, two cycles, three cycles, and the third touch of that trend line as well. So that stands as a reasonable trade. And again, you sent this to me this morning, so I'm not sure if you did place the trade. Looking at that gap open there, I can't really tell what E-signal's doing. That looks like it's missing the bar. Because you've got this bar here, which is the one you should have been trading underneath. Although that would tell, that's your 50 EMA price. I can't see where trade price is on this. That's your 200 price. To me, that I just wonder if that's a bar there. Anyway, it'd be interesting to see if you got in underneath that. Poor data. Yeah, it is poor data. So, yeah, that would have been a trade at some point yesterday that was worthy of looking at. Good stuff. And the euro thing is similar, no doubt, as is the euro dollar. Oh, come on. Okay. Coming to the euro pound and the question on ATR. So I attached a shot of the euro pound. I didn't trade because of the poor risk reward. Okay, I'll come to you on that. Explain the ATR stop placement. As I suspect in this case I might have chosen to employ it. You suspect you might have? Okay. I presume you're saying your risk reward is poor because, by the look of these two lines, that this is where your stop would have been, and you're targeting just this previous low. Remember, in a market that's trending nicely, this low, we're getting lower highs, lower lows. So you'd expect this to be broken. So you could look at, or you potentially should look at least a 1.272 as your target. Or even better be the 1.618, and that therefore would give you a better risk reward. Yeah, so we can see that in the cyclicity of things, we're getting lower lows. So you should be looking at that. Yes, it's fair to target this as if it's a major support line somewhere else. Which, yeah, so that might sort of say, well, maybe I should only target that, and therefore my risk reward is not so crash hot. Just doing I'll just put the fib on here for your extensions. Okay, so what I was suggesting is maybe target this one or this one, which then might give us a better risk reward. In terms of if you come in here, you're risking sort of 130 pips. Here's 130 pips, as you suggest, not really crash hot, but you come down to here, it's 220 pips, so you're getting close to 1.5, and obviously down here it's just over 2. That said, there's other ways that you could look at this market in terms of well, perhaps we can use an ATR style stop, right? Now what I mean by that is if you have your ATR on here, which is this red line, but you don't really need to see the red line. In fact, I probably should take that off and make that grey. But over here we've got ATR of 57 pips. Yep, we can see that. That's using an ATR 7. So what that suggests is that when the market moves, it's rare that it does a full bars if it's turning for the reasons that you want it to turn. You've got your horizontals up here, you've got your Fibonacci levels, you've got a reason for the market to be going, hey, we're getting short in this area. Once you've established that, it's rare for the market to then go against you in the direction, or against your direction, by a full bar's length. Yeah. So some people use the ATR from the close price. Some people use it from the high. So in effect, you're going 57 pips. So if you're coming in underneath this bar here, you're going 57 pips from the close, would put you just basically above the high of that bar. Others might use it above this one here, which is a little safer, so 57 pips brings you into around here. Yeah, and if that's the case, then your stop is going to be, instead of what the original 130 was, your stop you're looking at about 110, and therefore your risk is now 150, which is just shy of 1.5 times 1. Yeah. ATR is of 7, so it's looking at the last 7 bars. You can change that to suit you. You might say 5 because there's only really 5 days in a week, 5 trading days in a week. I wouldn't go too long because you then have too much information. Like ATR 14, I don't think is probably necessary. Somewhere between 5 and 10, I think would be ideal. So yeah, then get you're risking 110 pips for 150 pips, and that's closer to 1.5. Or if you go off this close, then obviously you're risking 50 or 60 pips, and your target of this previous double bottom is 150 pips away. So now you're looking at 2 or almost 3 to 1. Yeah. So does that kind of make sense? You can see here that obviously ATR of around 57, we're not getting 57 pips from. Let's have a look at that a bit more detail. It closed here. It's not 57. We go 57 pips up, and that's there. So even though this was an engulfing bar, it didn't get anywhere near it. And you could probably go 57 pips from there. Puts us just above the high of yesterday's bar. So there's 2 ways of doing it: either doing it from the close, or doing it from the high of the bar in a downtrend. Yep. Cool. Okay. The next one you're looking at is Euro, and you said no trade. Look, I have said, I know you're an early starter in the prop group, but I have said that you can trade off bearish engulfing bars if they're at a point where you expect the market to turn. Yeah. You mentioned that you have cancelled the trade because of the being an engulfing bar. It closed right on its low, so it's clearly the sellers are clearly dominating the market, and that's a good thing. It had a bit of a rally on the open, and that was actually off the. If you break it down, you look at that was actually off the Chinese news. So this rally here was at 0600 MT4 time, which is about 4 a.m. Euro. Sorry, the Chinese data came out at what time? Our time yesterday. Came out at 10 a.m. here, which is in 2 hours. Which is So these 2 bars here this is 9 a.m. Bali time, 10 a.m. Bali time. So this is the Chinese data. However, once the Europeans opened, the market fell. So this, whilst it's a kind of a change in direction, a bit wish-washy, it's certainly the sellers are there and dominating the market. It's not, as I wrote this morning, you can go in on this. I've just gone in with a 0.5%, and then if I get the confirmation lower high, lower low that the sellers come in and continue to push it down, then I'll go in with another 0.5%. So it's a little slightly aggressive entry. Your momentum's in the right area, but the reason for the market coming off is highlighted by the you've done all your analysis. There's a horizontal level, there's a Fibonacci level. Your 50 EMA is getting close there. The momentum's in the right area for us to get short. And Draghi went out and started buying Italian bonds, which is something that he was said he would do last month. But then people took that as okay, he's going to do quantitative easing sometime this year. Don't know about that, but certainly it's giving us the effect that we want, which is the market to get bearish again. So trading off a bearish engulfing bar, it's not the ideal setup, but it's certainly what we want to see is selling here. We were looking at it earlier in the week because it's come back up to this zone that we were looking to sell at. We were just waiting to get the selling to come into the market, and it certainly did overnight. And we should at least look at it in a minor way. Risking a quarter is a good start to start the trade off, and then maybe add to that as it continues on or gets that confirmation. Yeah. Okay. Now we come to Aussie Kiwi, which is just a frustrating mongrel thing. Doesn't want to go anywhere. Okay. Long trend line and off AMA 200. Okay, so that one cycled underneath it, but it's then bounced off it a third time and a fourth time. And you've identified a zone here between the 50 or 486 fib I'm not sure, and the 382 fib. Okay. Fib retracement cluster of 4. Okay, I'll believe it. Oh yeah, you got this one here, the 786. Well, that's 3 I can see. So there's this zone here. Certainly, these highs across here, you'd want to see them strong, bouncing off that. And if the risk reward to target these previous highs, or even just $12.50, if the risk reward is okay on that, 2.2. Okay, well that's pretty good. And you're also saying it's coming off the 200 EMA. You sent this to me yesterday, so yesterday finished a sort of pretty average day, not giving us anything. But it sort of still held that support area that you're looking at. Excuse me. It's under that trend line. How do you have it? Wrong way. How have I done that differently to you? Like that? Yeah. So I would have gone from this one here. Slightly under that, but you know my feelings on trend lines anyway. Yeah, look, it's Your momentum in the right area. There's certainly a resistance or support level here that, as you say, there's Fibonacci clusters, but there's certainly a zone here that the market's reacting to. Just know, you know, haven't seen any strong buying in this just yet. Selling, selling, selling. Bit of buying, selling, selling, selling. Just almost a buy, but it's more seller. Seller, and this one's who gives a shit kind of bar, or maybe a little bit of buying, but it's not really clear and concise. Even if I'd certainly be waiting for Friday's. What's today? Wednesday. So you need Thursday's bar to be the buyer bar, and then you'll be looking at sort of 80 pip stop for a 200 pip target, which is good. Yeah, I mean you've identified the area that you want to be getting long at. It's just a matter of seeing the price action come in and waiting for it. Yep, cool. Even though the long-term trend is down and it's a long phase 2 on a weekly chart, I think it's the conditions on the daily chart present a reasonable long setup. A weekly chart being a phase 2. Yeah. Monthly is a phase 2 and it's still to go. Weekly a phase 2. And as with a lot of at the end of phase 2, looking for a new phase 1, the market can spend some time here dithering about before it has another shuffle out, whilst it tries to make up its mind, as you can see here. A couple of little bit of dithering before it says, hey, let's make a new trend. Yeah. So even on the weekly, it's just trying to decide whether it wants to go ahead longer again, and that'd be the smarter trade, I would have thought. But however, if it sort of gets below these levels here, you'd have to say, well, we're continuing back down to retest 105. Could happen. I don't see it happening, but it could happen. Okay. No new trade. There's a new email. No new trades today. A lot of sideways stuff. Open trades. Dollar sec long. Pound Swiss long. Yesterday's trade ideas. Dollar yen long. Pulled the limit order when shorter time frames crossed over. Dollar Swiss long. And dollar NOK long. Didn't get in on that on the 4-hour. Looking at euro yen, Swiss yen, pound yen. This was sent yesterday, and I've gone through the yen crosses this morning. I wouldn't be touching the euro or Swiss or pound yen. Aussie dollar Kiwi, long off trend line. Got some buyers yesterday. Need confirmation. Okay, so we've just done the Aussie Kiwi. Let's have a look just quickly at. Would you say the pound Swiss, which is euro pound. Dollar yen. There's another one, dollar sec. Yeah, that's the other one you're in. Okay, so you're in that. There's a high test, not testing anything, so you've left your stop in, and you're still long. Cool. Pound Swiss, you're long for the third day, you said. So I wonder if you got in above this one or above that one. If you're in it for 3 days, and you sent me this yesterday. So either way, that's looking okay. And then the dollar yen, you pulled your limit order because hourly turned into a short, or the shorter time frame you said. Look, I wouldn't get caught up with what the lower time frames are doing. I've moved my stop underneath that purely because it's a reversal bar, but it's a pretty bloody bullish reversal bar. So I'm not too concerned about it, but I have moved my stop up underneath that. And my limit order was sitting there waiting to get filled above this high where I wanted to get filled at. After it gapped higher, I'm not too worried what the hourly's doing. I only just missed getting in there, but it came back and filled me. Obviously, it's come and fallen again before rallying. I don't get fussed with with the shorter time frames. Don't really care what it's doing. If you look at it in that light, what's that? That's an inverse head and shoulder pattern, where you're not getting lower lows anymore. You have got a lower high, but you failed to get a lower low in this new phase one down. So that's on the 4 hour. If you're looking at that, you'd go, well, there's this thing should be tracking higher. So I don't look at the shorter time frames. I do all the time, but I don't let them affect my end of day trading decisions. You've got to sort of take your end of day hat off and look at the hourly, and then but if you're looking at end of day trading, then focus on the day chart for that trading decision. You might go and look at the hourly on this too, just out of curiosity, but don't let that cloud your judgment for your end of day trade. Right. Aussie Swiss so far this month has been a bit of a bummer. I've attached a snapshot of the Aussie Swiss with what looks like a convincing head and shoulder pattern. Yeah, Euro Aussie does too as well. I've drawn a neckline and would like confirmation I've got it right. So far I've not seen it close below the neckline. Do we need that for confirmation? Yesterday was a high test bar and it seems that it will form a ring high today, probably with a seller or even a bear bar at the end of the day. With the news from China coming out, should be looking at the lower time frames for an opportunity or stick with the daily. Well, you can look at the trading the lower time frames on, absolutely. This is, you could either have it like that, or when you do draw head and shoulders, you should say, well, that's where's the low point there? There's the low point on that bar, and this is, so there's your neckline, okay, and it's pointing in the right direction. It has, you're quite correct, it hasn't closed below it. There's two ways to trade head and shoulder patterns. There's trading the breakout, so you would have been getting short here at around, like I did on the Euro Aussie, but the other way. And with that, your stop should be above there, because sometimes it doesn't come back and retest, which is the other way to trade it, is you get a retest at this level and then you're going short. Yeah, so breaks through here, comes back and retests, and then you go short. Yep. Yesterday was a high test bar. Yeah. Today is obviously an engulfing buy bar. Yesterday, sorry. And today's still got a bit of buying in it. So let's look at your stuff. Sorry. Yes, your head and shoulder pattern is correct. Shoulder, head, shoulder. You've got the neckline correct. And obviously this bar doesn't look like that at the end of the day. But that's good identification. You've drawn this. That's interesting that it sort of came and got near the 1.618. The other way you could look at this is saying, well, we've got the cycles happening underneath now, so you'd say, well, let's trade this as a new cycle low. We've made lower lows. We've broken this significant low of this uptrend. We're now making lower highs, lower lows. We've had one cycle. We're now looking at the second cycle. and you could go something like that, and so if I get selling up around here off the moving averages, off a support resistance line, off the fib, then you could look at trading this as a new phase one down maybe. Yep. Okay, dollar euro pound short. Okay, you're in this. Sell, stop loss. Okay, it's just above the high of this bar. Take profit. Take profit, take profit. Okay, so you've got 3 take profits on that. Cool. Split the order. That's cool. And euro pound. Did it hit your target? No, it hasn't quite hit your target. I think your target was that low there, your first target. And your initial stop's up there. Cool. So you don't need to amend anything at this stage. And dollar yen long. You chased it a little bit. The entry was at 106 sort of 95. I went in at 107.00. Gave away a bit by paying up. The market tends to always come back in and fill the gaps in. Your stop was initially under that. Shit, that might have got close. Mighty close. Yeah, so I don't see reason to sort of chase it. On a Monday, it generally does come back and fill that gap in. And you wanted to get in at this above this bar. I don't think you should be sort of chasing the market there. Giving away 20 pips. Okay, Aussie Swiss. I've been looking at it and have some questions. Since Feb this year, it has been basically trending up. Yep. It has loosely followed an up channel and is now at the bottom of it. Okay. There's a strong support level consisting of support line, trend line, support line, trend line, and fib cluster. Okay, you haven't got the fibs on this one, but I believe you. It is Class C bullish divergence. Alright. All this implies a reasonable setup for a long trade. Okay. Nothing wrong with that. You make a good argument. However, it is on its second cycle under the EMA 50 and made a short-term lower low sequence, implying that the uptrend may be broken and may be a phase 2 trade, even though there is no divergence, but it is convergence. Question is, if we treat it as a long phase 1 trade, then the reward to risk is quite good. However, if it's just a phase 2, then it's marginal. Well, you need to sort of make the decision with prior to doing the trade as to what do you think is the strongest setup? Do you think it's going to be going higher from here, or is it going to be going lower? Who's going to be the stronger performer? Is the Aussie going to outperform the Euro or the Swiss? Sorry, or is it the other way around? You made a fair argument for this to go long, and this price action, whilst it has done a cycle underneath, there's no suggestion. It could easily re-engage in a new uptrend, is what I'm suggesting. Yes, this is broken here, and we've had these 2 cycles underneath, but if your argument for these clusters and this horizontal level, I think that the argument you make is a sound argument, and so you should be trading with that in mind. If it's to go and do this cycle and create another short cycle, well, then you need to have a look at these horizontal levels that it's trading on. You've got this one down here, which your argument is that it's stronger than well, your argument is that that's quite strong, and I see one off these highs, these lows, as being a reasonably strong level as well. So it's a matter of doing your own analysis and say what's the stronger position here. This trend line that you've got, it looks to be actually underneath it now. So you've got to make up your mind which is the stronger trade. This would suggest that this is broken down, that you're perhaps going into another downtrend. Wasn't fundamentally, I think this is probably a better trade to go long. Technically, I think it's probably going to go short. And the final thing I'll say is, if in doubt, stay out. But you want to go long either way. You just don't know if you wanted to target the 50 EMA or this level here. My suggestion then would be split the trade, put half of it here and half of it there. If it gets to this point, analyse again as to, do you think it's going to continue on? Move your stop up to break even. You got half the trade out, and you've locked some profit in, but you've left the door open for that to continue on. That's another way to approach it. But I think you need to be clear at the start as to which you think is what it's actually doing. I know you can look back in hindsight and say, okay, well then that's what it's doing, but you've also got to have conviction of your trade. I hope that sort of answers you, and I wasn't too wishy-washy on it. All right. Long trade dollar yen set up, pulled back to previous high. RSI extremely oversold. Friday closed a strong buying. Doesn't mean anything if Thursday and Friday bars are still inside Wednesday's bar. Not really. Is it classed as some sort of inside bar? Well, Thursday's bar would have been, but Friday's not. Not by the definition of an inside bar. This is inside that, but this is not inside this. So when we talk about inside bars and golfing bars, we only refer to the previous bar, not what happened a couple of bars back. Okay, holds on to the previous high. RSI fib retracement. You've got your fib. Yep, that's good. Yep. And the last one, traded the euro pound. Placed this on the 13th last week, but didn't trigger. So I waited and now place it again. RSI hit overbought. I still see the euro weaker than the pound in the long run. Got short at 79.12. Okay, cool. Okay, so you've gone fib from there to there. Let's come back to, it looks like the 50. And you've drawn this to this to get your target. Just below the 1.272, or at the 1.272, which is also that channel line. Yep. Okay. That's great. Send in entry 5 pips below the 50 EMA. All good. That's good stuff. Yep. Okay, guys, what's today? Wednesday. That's it for today, and I shall see you again on Friday. As I mentioned at the start, if you're interested in coming and spending a week up here with me, we'll be doing sort of trading, but also going around the island and just seeing what's available to see and do, and have a few meals and a bit of a laugh and spend some time with other like-minded traders. Alrighty, guys. If you're interested in that, K2A, looking at knocking the price off a bit of it. So just send us an email or Sire an email and let us know you're interested. Otherwise, you guys have a, when is it? It's November the 15th. So it's only a couple of weeks away now. But yeah, just send us an email and or Sire an email if you're interested, and otherwise I'll talk to you guys on Friday. Thanks, guys. We'll speak to you soon.